Hey everyone, in today's video we're going to deep dive into the sexy world of life insurance. Okay, maybe it's not that sexy, but it's still a very useful topic to understand and know. Hi everyone, I'm Star Tower, your financial fitness coach, here to empower you to become financially healthy and to live the life and retirement that you and your family deserve. Welcome to Wealthy Wednesday, where I talk about concepts related to wealth management and long-term financial planning. Today's video, I'm going to talk about how to determine whether you need life insurance, how much life insurance you need, the various types of life insurance, and what goes into the costs of your premiums. So without further ado, let's dive right in. So when you're trying to decide whether life insurance is a good fit for you, the first question you need to ask is, do I love my family? For those of you that love your family or who somewhat like their family or who might think that in the future their like will turn into love or a stronger like, then life insurance will help to ensure that they're taken care of if something happens to you. For example, if you're the primary breadwinner of the family and your family relies upon your income, if you have a lot of debt like mortgage or car payments and your family might incur these payments if anything happens to you, or you don't have enough savings and assets to take care of your family, then you might want to consider life insurance so that they'll be taken care of. And if you don't like your family, just stick them with your debt. And even better, don't bother making a will. That way they're stuck in probate and courts for years to come. I'm kidding, don't do that. It's a huge pain in the ass. Don't do that to your family, even if you don't like them. Another question to ask to determine if you need life insurance is, does my employer already provide life insurance? So in some cases, the employer already includes that as part of your benefit package, but you want to, most of the time we don't necessarily read the terms and conditions associated with that life insurance, so make sure you understand what terms and conditions are associated with it and how much the life insurance pays out if something happens to you. Usually on average, I've seen $50,000 across my employers or 1 times my income up to $100,000. And it's also useful to remember that if you leave your employer, you don't get to take that life insurance with you. So you might want to take out supplemental life insurance in addition to what your employer is already giving you so that you're covered in case anything happens to your job. So how do you determine how much insurance you actually need? So I'm going to give you 3 ways to determine that amount. So number 1, multiply your current income by 10. So if you're making $100,000, you multiply that by 10, it's about $1 million. This kind of gives you leeway, especially if you're the primary bread earner for your family, kind of gives them some leeway in terms of being supported in case anything happens to you. Number 2, you can multiply your income by 10 as well as add $100,000 to $150,000 for every child who is going to need education. So if you make $100,000 a year, multiply that by 10. If you have 2 kids, multiply that by 150 times 2, which is $300,000. So you'll need $1.3 million in terms of life insurance policy. I use 150,000 because it used to be 100,000, but with the rising costs of college these days, that's why I'm using a more higher number than what the previous rule of thumb was. The third way to calculate how much insurance you need is called the DI method. D stands for debt. How much debt do you have, excluding mortgages, including funeral expenses, if you want to take that into consideration. I stands for income times the amount of years that you think your family is going to need support. M stands for your mortgage payments, how much mortgage do you currently owe. And E stands for education expense. How much education expense do you think you'll need to take into account for each of your kids? So add that together and that ends up being the amount of life insurance that you need. So now that you determine you need life insurance and how much life insurance you need, let's talk about what type of life insurance you need. So before I get into that, I'm going to explain some terms that you need to know to understand your life insurance policy. So first off, there's the death benefit, and that's the amount that your family will get if anything happens to you. That's the amount that you decide that you want your life insurance policy to cover. Then there's the premium. The premium is how much you pay to buy that life insurance policy. In some types of life insurance, there's also what's known as the cash value. And the cash value is the part of the life insurance that generates interest based on investments and where you can also withdraw or borrow against in case of emergencies. So there's many various types out there, and I'm going to kind of describe each of them and kind of compare them to a fitness plan to help you understand each type better. So the first main one is called a term insurance policy, and that's usually a insurance policy plan that provides temporary coverage, for example, up to 10, 20, or 30 years in case anything happens to you during that time. It basically replaces your income if something happens to you and helps your family in terms of financial support. And you can add in an option for it to be renewable after that term ends, and also for it to be convertible into a permanent or whole life insurance. The pros of a term life insurance is that it's usually the lowest cost. You pay the lowest premiums on this term policy, and the cons are that if you live beyond this term, there are no payouts to you or your family, and there's no cash accumulation value as well. So if you brought a term policy for 10 years and nothing happens to you, there's no payout, basically. So if we look at this in terms of comparing it to a fitness plan, it's like a 30-day challenge, right? So within that 30 days, you have to meet certain goals. You have to, for example, like do 30 push-ups a day, do 30 sit-ups, etc. And if you meet that goal, it's all or nothing. If you meet that goal, then you get the benefits of that. Basically, once the challenge is over, so are the benefits, and you don't get any more benefits unless you just sign up for another challenge. So now let's talk about a second type of life insurance, which is the whole life insurance. And this is also known as Perm. So when you hear term, Perm refers to whole life insurance. Basically, the whole life insurance policy provides permanent coverage for your entire life until your death. Premiums that you pay for goes towards three buckets. It goes towards your death benefits, it goes towards the insurance company's operations costs, and then it goes into a third bucket called the cash value. And the cash value is generally where the life insurance takes the remainder of that premium and invests in a conservative yield fund so that it generates interest on your behalf. And so upon your death, your beneficiaries receive both the death benefit and whatever has accumulated in the cash value. The cash value also allows you to borrow against it or to withdraw it in case of emergencies. So if you borrow from a bank, the interest payment is very high, but if you decide to borrow against your cash value, you might get a better deal because you already have that relationship with your insurance company. So the pros of the whole life insurance type is that you're covered your entire life and your family is guaranteed a death benefit in addition to the cash value accumulation upon your death. The con is that this life insurance policy will cost more than a term life because you're covered for your entire life. So in terms of a fitness plan, you can compare this to a lifetime gym membership where you're basically paying for benefits, which is access to the gym your entire life, and you have access to that gym as long as you keep paying the premiums. Plus you build equity, which would be the cash value over time, such as perks like 1 month free or guest passes, the longer you have membership with that gym. The third type of life insurance is the universal life insurance, which is a variation of the whole life insurance, but with more flexibility in terms of your premiums and your death benefits. So in this case, you can adjust the amount of premiums that you pay and the frequency of your premiums. So if you're maybe generating less income during a certain period of time and you've kind of paid all your premiums on time in the past and you want to decrease it during that certain period while you're generating less income, you can do that as well. And you can also make adjustments to your death benefits. And because this is a variation of a whole life insurance, you also get the cash value, and that cash value can also fluctuate over time because the insurance company usually places it in an interest generating investment. So the pro of this is that it is less expensive than whole life insurance, and that you also have the flexibility to adjust your premiums and your death benefits. The cons of this is because you're adjusting all these premiums and your death benefits, you need to make sure you're monitoring this policy to make sure that you're still getting the amount of death benefits that you want. So if you're making less premium payments and the premium payments do not keep up with what you're looking for in your death benefits, that death benefit might decrease. You want to make sure that sufficient premiums are being paid so your policy doesn't lapse. You might have heard of an IUL or an Indexed Universal Life Policy, and basically this is a type of universal life policy where your cash value is invested in a vehicle that's tied to the S&P index. So it has more risk than something that's put into a universal life insurance policy because you're investing in vehicles tied to the S&P index versus something that's more conservative, such as interest rates set by the insurance company. So in terms of a gym membership, you can think of it like a flexible gym membership, right? Where you change how much you're paying for gym membership every month. and that kind of determines the level of services that you get. So let's say you start out with the premier level of gym membership, and because you want access to everything that the gym has to offer initially, but then you find out that maybe in like another year you want to maybe decrease that level of access to only focus on maybe just using the weight room or the pool. And so you kind of change that gym membership to something that's a little more basic level, so that you don't have to pay for an access level to everything that the gym has to offer, just for the areas that you want to focus on for that period of time. Then the fourth type of life insurance is the variable life insurance. And this is another type of whole life insurance policy where you have fixed premiums, fixed death benefits, but your cash value fluctuates because you get to decide how you want to invest that cash value. So before I mentioned that in a whole life policy and a universal life policy, life insurance policy, the insurer gets to determine how the cash value is invested, usually in a conservative yield instrument. But in this case, if you want more control over how your cash value grows, you would get to decide which investment vehicles you get to invest that cash value in. So the pro of this is you have more control over how your cash value is allocated, and you might want to invest in more riskier instruments such as equity, so that it accumulates and grows more over time. But the con of it is that if the instrument that you invested in is not doing well, then your cash value can drop. So if you think of it in terms of fitness plan, you can compare it to having a personal trainer with a customized training plan, in addition to your gym membership. So more flexibility and control over your workouts suited to your goals. It comes with potential risks such as injury or overtraining. So now that we've covered whether you need life insurance, how much life insurance you need, which type of life insurance you think you need, let's go into the factors that determine how much premium you pay on that life insurance. And I'm breaking this down into two types of factors: personal factors and also policy factors. So they look at personal factors such as your age, right? Obviously, the older you are, the higher premiums will be because you run the risk of something happening to you as you get older. They look at factors such as your gender. Males are at higher risk of mortality, so they pay a higher premium than females. They also look at your health to determine your risk level. So for those of you who exercise, who don't smoke, who aren't obese, and who take care of their health on a regular basis, your premiums will be lower than people who don't take care of their health. And they also look at your medical history as well. So if you have a history of certain illnesses in your family, that premium might be impacted by that medical history. Another personal factor would be occupation. So for those of you who are in higher risk occupations, such as firefighting or construction, your premiums might be higher than someone who just has a basic desk job, for example. And then finally, they look at your hobbies. If you're into extreme sports, such as jumping off cliffs or out of planes, that might make an impact to your premiums. Then there are the policy factors, and that's based on the type of insurance, the amount of death benefit that you're looking for, your insurance carrier, and any additional riders or provisions that you want to add to your insurance policy. So thank you for watching my video. I hope that this was helpful to you, and if it was, please give it a thumbs up and subscribe to my channel for future content in financial fitness. So if you're serious about life insurance and you decide that this is the path that you want to take, I do work with over 200 financial institutions and insurance companies. Contact me for a complimentary discovery call. My contact information is in the description below, and we can set up some time to do a more personal and accurate assessment of your needs. So until then, let's continue our financial fitness journey together, and I will see you in my next video. Thanks, everyone.